Hello, I'm Mario Toneguzzi, managing editor of Canada's podcast, Taking Care of Business today with Paul Nyereka, who is a vice president of client success with MoneyWise Workplaces. Thanks, Paul, for joining us today.
Thank you for having me.
Well, it's tax season. Many Canadians are in the middle of all this right now. Tell us, Paul, what are some of the new tax changes that Canadians need to be aware of this year?
Thank you so much for having me on. So everyone's favorite time, tax time, is upon us. So as you mentioned, many Canadians are really increasingly turning their focus to what to send to Ottawa this month and the month coming. So there's some significant changes that have come on, but the ones that are really interesting to most Canadians are the repayments on COVID relief-related support. That is really coming up on many Canadians. And if you're one of those Canadians, that is definitely one of the things to start thinking and putting in your plans, that some of the money that you received as help when we're going through the challenging times will be due to go back to Ottawa.
Yeah. Do you think a lot of people were aware of that?
I think a lot of people are increasingly hearing from the news that is going to be something to put on their radar. I don't believe that in March, the beginning of March, many people have paid as much attention as they should to their taxes, even if they did not receive the COVID relief.
Okay. Anything else of significance that is new this year, Paul?
Oh, yeah, absolutely. So there are some new things that are coming on. The most exciting one is the first homeowner savings account. That is something that is going to come this fall. That was part of the changes that are due this year. And this is to help first home buyers with their ability to purchase their home. So this is an account that will be able to allow you to save up to $40,000 and grow that money tax-free. Similar to an RSP and a TFSA if they got into a marriage. So this is an account that Canada has not seen before because we've either had tax deductible accounts where it reduces your taxable income, or we've had a grow the money tax-free account, which is the TFSA, that is excellent, where whatever you grow in the market, you get to keep without paying taxes. This marries those two together and gives you both benefits. So that is something that is the biggest change that is coming in this upcoming year. Okay. However, knowing that most of your listeners might not be in a position to purchase a new home because this is only for first-time home buyers.
Yeah,
they'll be excited to know that because of inflation, some of the tax brackets have also been expanded. So the base amount where you don't pay taxes has been increased. The tax brackets have also increased. So for the same amount of money, if you do not make a cent more, you'll be paying less taxes this year.
Interesting. Yeah. And there's a lot of rumbling out there in the media about a possible strike with Canada Revenue Agency. Can you talk a little bit about that, Paul, and what's happening there and what potential impact that's going to have on taxpayers in this country?
That's an excellent question, Mario. Thank you so much for asking that. Right now, just to give the current situation, right now, they're in negotiations and having strike votes that are due on April 7th. So by April 7th, we will know whether or not they will walk away from their desks. And this is very significant for CRA workers, because if they work away from their desk between April 7th and April 30th, which is the deadline for your taxes, we will not be able to have any service on the 1-800 number. We'll not be able to get any questions answered on things that we want to do, resetting passwords and things like those that most Canadians rely on to know what their space is or what their last notice of assessment is. So it is very critical to have them working. But as we know now, they are in strike conversations that might yield fruit April 7th. And if this happens, that could mean less support for somebody filing their taxes at the time.
Okay.
I know the natural next question is, what should we do?
Yeah.
What we are advising people to do, at least, and this is not an opinion that this is more of a Moneywise Workplace's opinion. This is a Jean Paul opinion, but most experts are also saying, try to file early. Try to file early. The tax season really started, I believe, February 20th. There were net files started receiving files February 20th. So if you're worried about being the first in line for some reason, you're not going to be the first in line.
Yeah.
But the one thing that you can do yourself a favor is, if you file early, you have the chance of getting the full support and your questions answered, and not having to worry about whether or not you're going to receive your refunds or your benefits on time. Because if you file in those last 3 weeks, if this strike vote goes through, you're really leaving it up to chance.
Yeah, exactly. So, I know it's early to think, or maybe it isn't early to think about next year, but what should people be thinking about today to minimize their tax situation for 2023 taxes?
That's a really good question, especially because of how early it is to ask that question.
Yeah.
But most people actually need to think about, and this is me speaking as a CPA at this point, you need to think about taxes as soon as the year turns, right?
Yeah.
Like January 1st, the year turns, taxes start. So the game of taxes really is in the first quarter right now.
Yeah.
So if you are one of those Canadians who has some room in your RSP space, you want to start thinking about, should you be putting a little bit at a time to start reducing your taxable income for next year? And if you're not sure how much you're going to have in the ability to contribute to that tax RSP, then put the money in a tax-free savings if you have room. And then at the end of the year, you'll be able to take all of that from the tax-free savings, put it in your RSP to reduce your taxable income. By creating that habit of putting this on the side, knowing that it's going to reduce your income later down the line, is exactly what you should be doing right now.
Okay, wonderful. Now, Jean-Paul, before I leave you today, Linda, just explain to us a little bit what Moneywise Workplaces is and what you guys do.
Oh, fantastic. So Moneywise Workplaces is a brainchild of Kelly Keane, who's a best-selling author and a true Canadian financial educator. She's really passionate about information being Canadian. And what we noticed is most of the financial system ends up becoming a complicated network of agents and people with commissions. And that ends up becoming a problem for some. So what we started at Moneywise Workplaces to do is to provide people with guidance where they're at work, to give them the tools to have good decision-making ability just from their work. So that if you're worried at work, you should be able to go into your workplace, the Moneywise Workplaces study area, and learn what you need to do about your housing and your RSPs and your insurance and estate planning. All those things that are very important, but you cannot find easily without somebody having to sell you an insurance premium, or somebody selling you another banking product.
Yeah. All righty. Well, thanks very much, Jean-Paul, for joining us today.
Thank you so much for having me, Mario. I was glad to be on, and hope to get back on at another time.
All right, wonderful. That was Paul Nyereka, who is Vice President of Client Success with Moneywise Workplaces. I'm Mario Toneguzzi, Managing Editor of Canada's podcast, taking care of business today. Thanks for joining us.